Good morning, everybody. Thank you, Pallav, Daniel, team PMS Bazaar, for giving me an opportunity to speak here. It just gladdens my heart to see how PMS Bazaar has grown. In the sixth edition, I think you're at 600 people registering for this event. I hope by the time it's the seventh one, you're at 1,000 people. So well done, team PMS Bazaar. It's also, yeah, round of applause to you. It's also, indeed a privilege to be here at this event because I get to interact, talk to, and sound off my ideas on a sounding board comprising of the best, the creme de la creme, in the wealth management, asset management, and the investor fraternity. That's you guys. So, this is something I thought I will just bring across as a point. Over the last few years, India has actually seen an explosion in terms of the wealth and the wealthy. We talk about $2,000 per capita income being crossed and how consumption trends are changing. The trend is actually even more explosive in the investment fraternity. How these people who are getting more and more disposable income are changing their investment pattern. And that's something I thought I should just talk to you about. So in the next few minutes, what I'm going to talk to you about is how there are certain trends which have been developing in the Indian landscape across inbound and outbound investments, and how Gift City as an entity is actually, becoming the entity which is leveraging all its customer centricity to attract those investments. In fact, I dare say that a lot of these investments will come in through alternates, hence the topic, advancing the growth of alternates through Gift City. Well, this is pretty much the agenda. So let me just start to talk to you about the global investors, and let me just take you through some trends. The first trend I'd like to just talk to you about is how global investors are starting to favor India. We know about some of this data, but just getting that across in one platform seems quite overwhelming. The change in contribution to global FDI inflows, India has been pretty much dominating the flows coming into Asia over the last 10 years. In fact, the CAGR of India's FDI inflows as a percentage, or rather the FDI inflows coming into India as a percentage is 8.75%, which pretty much bosses the next entity, which is China. Equally interesting is the fact that in terms of emerging market inflows, there's a very interesting number of 15.74%, which is currently the proportion of India's inflows in the emerging market, MSCI Emerging Market Index. It's 94 basis points over last year. But what is very interesting is that 4 years ago, India was sub 10% of the MSCI emerging market flows. Clicking through in terms of trends, if I have to talk about the second one, India is now at the center stage of inbound and outbound investments. And just look at these four numbers which have been given across. 19 billion is the FPI flows in India for FY24. This is over 62% of the total flows which have come in. I think the last peak which we saw was in FY21. So that's already 62% of the flows coming in. 47 billion is the demat value of securities held by NRIs, and that's grown at a CAGR of over 19% over the last 8 years. 15 billion, and this is exactly what I'm talking about in terms of how things are changing in the Indian investment landscape. 15 billion is the outward remittances in terms of LRS, which has happened, and just in the first 5 months of this year. This actually exceeds the total remittances which happened in FY22. 300 is approximately the number of family offices in this country. And family offices in this country has always been around, but it has proliferated over the last few years considering the amount of wealth that Indian families have generated. Incidentally, these are the family offices which are at par with the global family offices, and they look at offshore jurisdictions to set up business. It doesn't matter where they are. So they evaluate everything equally, whether it's a Dubai, Singapore, or in India. Double clicking from that, if I go to the third trend, this is the growing, I talked about global investors, this is the growing footprint of the global Indian. You look at how the number of the amount of NRE and NRO deposits have grown over the years. Currently, the total amount estimated in this country is $120 billion. And this has grown over the last 10 years, 3x in terms of NRE deposits and 4x in terms of NRO deposits. Now we keep talking about the Indian diaspora. It's equally important to see what is the composition of this Indian diaspora. We are 13.6 million NRIs across the globe. 13.6 million NRIs across the globe giving you this sort of money. 90% live in 15 countries, out of which 60% live in the Middle East. And I'll circle back to this point in terms of proximity to the Indian markets as we go along. When we're talking about NRIs, we are talking about outward and inward remittances. 15 billion, like I told you, is the number, which is the number of outward remittances which has happened from India. These are high net worth individuals which can park $250,000 in global assets, the total sum of which has been $15 billion. And this has already crossed 80% of last year's numbers. This is the local Indians' global appetite. Now, if you look at the money coming in, I think you look at the amount of money which has come in, which is 112 billion, which is already a 25% jump over the previous year. Very clearly, this is the global Indian preference, local preference. Let's talk about family offices. Like I talked to you about earlier, family offices are being set up across the country. This is to cater to the demand of growing wealth. Family offices are not necessarily old vintage promoters. These are young entrepreneurs who've sold off their businesses, startups. So there's a cross-section of family offices. But incidentally, there are around 10,000 family offices globally, some of them gigantic. Indians are just starting off. But pretty much everybody has the same requirement. They want to have non-linear returns. They want to have risk diversification. They want to have capital preservation, all of this at not too high a cost. So typically you will find that family offices look at alternates across a cross-section of private equity, private estate, infrastructure, private credit, which typically accounts for less than half of their holdings, 44% of their holdings. Needless to say, they need access to innovative products, which are typically available across offshore locations. And if they come to India, even the Indian family offices in India would look to a destination which offers them these investment options. Let's look at sovereign wealth fund money, which is usually classified as assets under custody. Mind you, this is assets under custody only for public markets. There's a vast amount of money which is coming in any case. 43.5 billion is the assets under custody of sovereign wealth funds in India. And just look at the YOY change which has happened over last year. These are some of the marquee names invested in public markets. They're starting to step up and invest more and more in the country. So if there is so much of demand, we are seeing so many trends. Equally, what are the challenges a global investor would face? If I can just summarize it, a global investor just looks for two things: predictability and parity. When you're talking about predictability, they don't want things to change. There should be no short-term reaction. There should be no tactical reaction. They come in with a long-term frame of mind, and they would expect that the domain, the jurisdiction in which they're going will have a very long-term jurisdiction with a very stable government behind it. Also, they're not looking for any special favors. What they're saying is it should be at par with what I'm getting in other jurisdictions. Parity. So I think if you talk to global investors, they're fairly clear in their mind. These are two of the primary factors. Typically, if I have to break down predictability, it comes down to three things: high transaction and setup costs, okay? Complex taxation. And complex, from the point of view is they keep asking people like us, how can it be made simpler? There are so many loopholes, or not loopholes is the wrong word. There are so many loops, so many hoops you have to jump through to get into taxation. And this is not about India. They talk about a lot of other jurisdictions. Mind you, there are so many jurisdictions like GIFT which are available across the world. So this is a general statement which they keep talking about. More importantly, they want to take the money out when they want to. There should be no capital controls or limited capital controls or clearly identified capital controls so that they know that when they want to pull out the money, this is exactly how it will flow. So if I have to summarize in terms of a customer demand, what are global investors looking for? Ease of setup. Taxation clarity. They're not asking for any special favors. They need clarity. And then they will take a decision whether they want to come or not. Access to innovation. It cannot be that you give everything except innovative structures, talent, products, because ultimately they are trying to access India as a market. So you need access to innovation. And of course, ease on capital controls. So what does GIFT City do? How does GIFT City stack up in terms of predictability? And this is something I'll just share with you in the next few slides. GIFT City is India's first operational smart city. It's the first operational smart city. The government operationalized this in 2015. It's developed on 886 acres of land. For some of you who've seen GIFT City, you will realize how vast that swath of land is. It's enabling, the mindset of GIFT City is to enable a comprehensive regulatory environment. You come to me, it's one-stop shop. It's a free trade zone with various tax incentives, and what we're talking about is financial products, financial structures, financial innovation going through seamlessly. More importantly, and I think this is the most important point, IFSCA represents the combined scope of 4 of India's premier financial services regulators, which is RBI, SEBI, IRDI, and the Pension Fund Authority of India. So 4 regulators, the combined authority of which is represented in IFSCA. So you can imagine the way they are gearing themselves up for growth. We talked about different investor segments, how investors want to come to India, what is the potential. Considering the challenges, what is GIFT City doing to enable these investments? So let's look at NRIs. I think the biggest challenge is the perceived current FPI regulations. They are perceived to be a little restrictive to NRIs investing in India. I'm just touching upon a few points just to give you a sense of how things are. For example, the contribution of an individual NRI investor should not be more than 25%. The aggregate contribution should not be more than 49%, and NRI shall not be in control of the fund. For those of us in terms of the asset management fraternity who have been managing offshore funds, this does turn out to be a sort of an impediment when you're talking about NRIs investing in this country. So what is the solution? Well, SEBI has come up with a consultation paper very recently, as recent as August 2023, saying that if the entity is domiciled in GIFT City, the aggregate contribution of all NRI investors can exceed 50%. And that's quite significant, provided this is in GIFT City. Also, if the passport details of NRIs are given across to the DP, it is considered to be symbolic of the beneficial ownership of that firm. And that is quite significant. Again, just on NRIs, few other things which have happened. Ease of access and investment process. I'll keep looping you through that predictability part of it and how GIFT is going through it. There's no requirement to obtain PAN and file tax returns. There are tax-friendly structures. For example, in terms of CAT 3, your compliance is very limited because pass-through is not applicable. Investors get the proceeds of their investments net of taxes. In terms of CAT 2, the investors CAT 1 and CAT 2, they can actually claim benefits in their home jurisdiction as part of the tax treaty with their countries. This is quite significant. Lower expenses, there is no GST on services rendered. So it lowers down the cost of operating, which can then be passed on to the investors. And cost willy-nilly will turn out to be a factor over a period of time. Last but not the least, I showcased to you about the fact that 60% of NRIs are in the Middle East. GIFT City is as close as they can get to the Indian market. So proximity to Indian markets through GIFT City is something which is very comforting for them, apart from the conviction they have in the jurisdiction. Let's talk about family offices. Very recently, SEBI came up with this family investment fund regulation. Now, instead of pooling together $250,000 per individual and trying to buy an asset overseas or trying to do something overseas, today family offices, by registering as an FIF with a corpus of only $10 million, can actually invest 50% of their net worth outside the country. 50% within the country and 50% outside the country. In the earlier slides, I showed you some of the family office names which are in excess of 1 billion, 2 billion, 3 billion, well, you can actually invest 50% of what you want to overseas if you are registered as an FIF. Very recently, Catamaran actually got registered as an FIF in GIFT City. And again, as a family office, then you get access to innovative products, tax-effective structures, the whole gamut of things. PMS and advisory services are also now being offered under GIFT City. This is something which is still getting cleared out, but already it is seeming to be quite attractive. We're talking about segregated portfolios. We're talking about transparency, something which we are used to in the local markets. The FME shall periodically furnish statements, on this. Permissible instruments. You're talking about securities and financial products where you can invest in, whether they're part of the IFSC, whether they're part of India or any foreign jurisdiction. And more importantly, I think discretionary PMS will include securities listed or unlisted. Tax benefits, well, some of the tax benefits, no GST on transactions. Obviously, it makes things very simple. And exemption from STT, CTT, and stamp duty in terms of transactions carried on IFSC exchanges. In fact, I think I skipped one point. Investments in derivatives is already quite big in GIFT City, and I'll show you some data on that as we go along. Not surprisingly, people like us are setting up shop in GIFT City. There is already a wide swath of investment managers. And what that does for customers in GIFT City is competition always breeds convenience, it breeds innovation, it breeds the best of things which you want to do for the customer. So by virtue of the fact that a lot of us are already there, it is already giving rise to a lot of innovation. Some of it is apparent, some of it is already being worked in a sandbox given by IFSCA. I just talked to you about entities. Let's look at the pace of funds and the quality of funds being set up. Access to innovative structures is not just in terms of financial tweaking, but GIFT City gives you a great platform for globally favored investment themes like ESG, technology solutions, etc. Recently, when we were traveling overseas to meet some investors, we realized even more that climate change is on the top of the agenda for a lot of global investors. They talked to us about that and said, do you have something in GIFT City for that? So that was very encouraging. But in total, at this point of time, if you look at the strategies offered by all the people which I just mentioned earlier, it ranges across from venture capital, private credit, real estate, long short, pipe, angel fund, long only, special situations, venture debt, apart from the quintessential private equity. So there are already quite a few strategies available for global investors. And not surprisingly, you will find the number of registrations going up year on year. Already in FY23, 22 funds have registered in GIFT City, which is like, 70-80% of what it was last year. I talked to you about predictability so far. Let me just take you through Parity. GIFT City is offering Parity to its global peers. Let's look at it across various parameters. We're talking about investors. Well, Singapore and Mauritius, you need to be an accredited investor. For GIFT City, your minimum investment amount should be $150,000. There's no criteria prescribed currently. In terms of tax residency, there are requirements in Singapore and requirements in Mauritius, but no such requirement in India currently. In terms of co-investing, which is usually something which global investors ask for, if you have to launch a co-investment avenue for the investor, in Singapore and Mauritius, you have to actually create a new scheme, which means filing a new PPM and getting a lot of other things done. In India, in GIFT City, you just launch it as a separate share class in the same scheme, provided the terms of reference are not different from what is being offered to the others. There's no restriction on inbound investments in India, inbound foreign investments in India, as long as they are AML and KYC compliant. And more importantly, look at the setup cost difference. In Singapore, it's around $80,000. In Mauritius, it's around $50,000. In India, it's around $20,000. This actually takes you back to what we were talking about of ease of investing, ease of setup, tax efficiency, and enabling the fund ecosystem. I will just require another 5 minutes to wrap up the next few slides. I know my time's up, but I'm very excited to bring this to the audience here. There's a thriving ecosystem for funds. Today, if you're setting up a fund, and if you're going there as an investor, you would like to see an entire ecosystem which is there. That ecosystem is already there, already thriving. Right from insurance companies to custodians to broker dealers to funds, it's all there. And especially banks. Banks are the backbone. You have almost all the global banks setting up shop there. Some numbers from the investment management point of view. What is happening? As an industry, these are probably 4 of the segments we depend upon. In terms of international stock exchanges, you're already talking about dollar-denominated products available, no transaction cost, and trading happening for 22 hours. Not surprisingly, the amount of derivative transactions which are happening, which I just mentioned to you about, is 632 billion, and monthly turnover is 60 billion. In terms of funds, people like us, AIFs are already there. The capital commitment which is there is around 18 billion. Brokers and intermediaries to carry on these transactions, around 65 plus are already there. They provide broking services and prop trading. In terms of allied services, I just showcased to you some of the ancillary services which are available there. Let's look at allied segments, other major segments. IFSC banking. I think this has been something which is huge. 41.2 billion is the size of banking assets there, and there are already 24 banks present in GIFT City. Insurers, so that means you have access to ECBs, you have access to loan syndication, trade finance, and the works. There are insurers and intermediaries as well as the fintech industry which is there in sizable numbers. Last couple of slides, last few slides. Some of the other key highlights, there's an overseas derivative instrument which was just recently executed. This was something which Standard Chartered Bank had done. This was worth 5 million. 5-year GSEC was used as the pricing reference, and why it is significant is because this is coming on the heels of the impending announcement of India coming in the JP Morgan index, JP Morgan Global Bond Index. So this could be quite significant. GIFT City is giving incentive to other funds to re-domicile from other jurisdictions into GIFT. And of course, Google has just announced their Global FinTech Ops Center. This is basically to leverage the UPI and Aadhaar tech stack and lead its Global FinTech Operations Center. They're investing close to 10 billion in India Digitization Fund. This is what Singapore and Dubai looked like. Singapore took 75 years to reach where it has reached today. Whether it's infrastructure, regulation, manpower, global interest, it has taken its time. Dubai actually is relatively faster. In 15 years, they have done what they have done because they've learned from Singapore's experience. GIFT is a manifestation of a nation's dream here, and I'm hoping that it gets done much, much, much faster. We are already, in 2019, we lowered the setup costs. There was a unified regulator. In 2023, the FME regulations, fund management entity regulations were created, and the future beckons. This has been the growth of Sundaram Alternates. It might be of interest to you that we were probably the first company in the country to be spun off as a 100% subsidiary from a parent, Sundaram Asset Management. And thanks to a great team at Sundaram, this has been growing by leaps and bounds. We've launched Cat 3 funds, Cat 2 funds, PMS. And just to give you an idea of some of our Cat 2 funds, I talked to you about the vintage which we have. Sundaram High Yield Secured Debt Fund 1 was launched at probably the worst possible time, 2018, went through COVID, GST, RERA, the works. Despite that, I think arguably it's the only fund in the industry which has returned money back to investors without a single paisa delay or default, with a gross portfolio return of 19%. RE2, which is High Yield Secured Debt 2, 28% of capital distribution has already happened. We are currently open with RE3. We just closed a performing credit fund, not closed as in we just announced a closure. And already the amount which we've collected is in excess of 1100 crores. Real Estate 4 is currently open, and we are getting a very encouraging response. We've already crossed 250 crores in the first closure. These are some of the awards which we won. And last couple of slides, portfolio management services, we've got 4 schemes, the highlight of which is 12 years plus track record, alpha of over 5% across all schemes. And I think more importantly, the best validation of the success of these schemes are the PMS Bazaar awards, which we have won. I'm hoping to win a few this time as well. GIFT City is a dream for a nation. It's a manifestation of a dream for a nation. You know, we at Sundaram believe that we are on the right path when we align ourselves. And like John Lennon said, you may say I'm a dreamer, but I'm not the only one. I hope someday you will join us and the world will live as one. Thank you very much.